So let's dive into Euro JPY. And Euro JPY shares a 1.60 U differential in favor of Euro. So at the moment, the differential favors carry traders to hold Euro bond debt. So I'm seeing carry traders tilting towards Euro. It favors them for now. But as Euro continues on monetary easing and BOJ sudden monetary policy tightening, possibly maybe increasing interest rates, that could reduce the carry trade for EJ in favor of Euro. And let's look at the structure once more. I want to be very fast as possible. So we have price build up supply roof from 2023. That's our supply roof. That's our supply roof. Price has sold 4 times on ascending trend line. I call it ATL. ATL is ascending trend line. So wherever you see ascending trend line is ATL, while these are all supply roof. The reason it's supply roof is that we had this elementary school thing here. Price bought here, create an ascending trend line. It returned here and sold. Sorry. Price sold here and sold here. Create an ascending trend line, ATL. Return here, sold. Return here, sold. So it's more like a primary school thing. It's more like a primary school thing. Any child can even be able to draw this thing. But as time goes on, you realize it's more than an elementary school thing. It gets a little bit serious because when economic data start creeping in, then you realize that it wasn't just line you are drawing. So, but sometimes it gets that way. So these are ROS, resistance becomes support on break of structure. There's no break of structure to the roof. The roof has been maintained as a supply roof. So if in the future we break that roof, then I will turn it to support. You can see on the line chart consistently maintaining that line starting from 2023. So the next thing is to come to the bottom. We'll have resistance becomes support, and we have a break of structure, price returns on ROS, and also as a retest candle after break of structure. So it's not just only support become resistance, it's also a retest candle from a broken structure here. You see, price create a series of supply roof here, broke it, came here to retest it, and it came here again to retest that structure. Here is also an RT, a retest candle. So we are retesting 2 times. Now, the 1, 2, 3 gives us here an ascending trend line, making here a demand floor. And they are all psychological structures. If you look at it starting from 2023, EJ has maintained this style, has maintained this pattern. So look at what price have done here. Update from the roof, buy from the floor. Update from the roof, buy from the floor. Update from the roof, trying to buy from the floor. They are finding it difficult to leave. So it's we have to monitor it and follow it step by step, layer by layer. So that is the only thing we can do at the moment. We can't do more than that. So we have seen what price has done there. Then when price came to this area, from this high, we had a stop, price formed a double top structure and sold down to the floor. And when price rallied again, it respected that structure. Why it respected it? Because we have here as ROS1, ROS2, resistance 1, resistance 2, giving us a descending trend line. When price came here, it respected it and sold. We had that structure broken. After break of that structure, here becomes what? RT. RT and also an SR. Resistance becomes support on break of structure and also a retest candle, SR/RT. That is what you have there at this level. That's what this level becomes. On structural perspective, that's what you have here. Here is also an ROS level. The price has created 3 ROS level, giving us a descending trend line, ROS1, ROS2, and the other one is ROS3. So when price returned again, it became a double confluence where a descending trend line meet an ascending trend line, creating a high probability trade in 2024 August. It's also an SR level and also as a retest candle from a broken structure after price have updated the roof. We broke out from the structure, retest 1, retest 2, and the price returned back to the common demand floor where it has always found buy liquidity. So let's change the color to represent green as we are looking for buy from that floor. So price return here again, it respected it and bought, return again, bought, return again, bought, return again, bought, all through February. February we came here, February, we bought, we came here February again, we bought, we came here December. And so you keep maintaining this style, right? Now, of course, market is trying to make its way up. EJ is trying to climb. It's trying to climb, but if it will not climb, it's okay. But let's look, we have another structure here. You see, when price came to this level and so some people call it manipulation. No, it's not manipulation. This is a primary school work, an ascending trend line, a psychological ascending trend line. Supply 1, supply 2, supply 3, supply 4. On ascending trend line, ATL. We also have this one, ascending trend line, because it's not descending, slightly elevated. So when price return here, we have a price action at this level, which I can also see on I saw that price action on daily. We have here as a demand floor, and if you look critically here, let me zoom so that everybody can see it clearly. So now you can see we have here as a demand floor, and that demand structure is broken. After the break of that demand structure, price has come down to retest it. Here we have here as a demand floor, right? That is a zone. So I have to make a zone for it. After break of structure, price came back here and retest and confirmed it by this buy candle, daily buy candle, before breaking the structure. After breaking the structure, this candle came and retested it. Thursday 02 May. Let me put a vertical line on it to be very, very specific. This came as a retest to that broken demand floor. And when price broke that supply roof, this one came and retested it. So let's also put a vertical line on it so that everything will be on perspective. This is a retest. Now confirming this ascending trend line as a structure. So when price return here, it should turn again to buy, to tap and update peak liquidity from the roof where others have been selling since 2022. And you see that bearish drop. And when you go back and check, you will find out that the 10-year Japanese bond yield at that area started performing magic. And the moment it started performing magic, you see that Euro lost momentum and the Japanese yen smacked it down. So you have to go back, make reference on the 10-year bond yield exactly at this day, what really happened at this day. So for reference, we are trying to save time. Let's say by 10 minutes, we should be over and focus on another thing. So here we have another structure here. Here is a supply roof. Here is a supply roof. And when price broke that structure, it retested, it came here, retested, confirming it again as a descending trend line, DTL. In the future, I hold it responsible for a sell. And look at what it has done. Let's see what it has done. Look at what it has done. It came here and it sold. It is that structure. This is the structure that brought about that sell. So I am also going to shade it because everything the market does, it informs us. It informs us. The market never does anything without inform. It has to inform you. But, our oversight, we ignore, or it's either we're in assumption or in denial, or our mind is troubled. There's always one thing that a trader is going through that affects his trading decision. It could be family history, it could be financial issue, it could be health issue. So there are so many things that will make you when you see trade and executing becomes an issue. So it's important to be in community of traders where you are encouraged and guided properly. So you see here, after price updating here, we have an update here as a supply roof. Very beautiful structure, break of structure. Price came here on demand to confirm it. So we have here supply, break of supply. We come here demand, break of demand, and price sold extensively. Now it come back here now. Look at what it has done. To replicate the price action it picked from here to sell down here, this is what it has done. Now price has created a structure here intending to come down, but there are parameters that are stopping it. So what we have to see is if it will come down. If it will come down, then we'll see if there are signs. If it will not, we also know. But one thing you must know is that there's a breakout from here. This breakout from here, pick the impulse leg from this area. After break of structure, price has sold down and price returned here, aligning with this structure. Sell, break of sell, price return here, temporary buy, came back, broke the structure because of what? There is already an impulse sell leg. This impulse sell leg is an ascending trend line. Peak liquidity in 2023, November, May 2024, and return here July 2024. So that impulse leg is still very much active. So what happens here is that that impulse leg is what sent price here to respect this price action at this level. Now the market is dropping. So let's go and see what we are going to find on 4 hours, because 4 hours will also give us a clue if it intends to drop or not. Then we'll look out for price action and possible beautiful crosses on 4 hours. On 4 hours, we'll find a cross. We have price create here a demand floor, right? It came back, broke that demand floor, and gave us here was supply sell, because it's trying to create a structure. For there to be a structure, there has to be break of ROS and break of SR. A support must be broken to become resistance. And as price goes on, resistance is broken to become a support to give us a trend line. It could be descending or horizontal, whichever way. But that is the structure of the market which we leverage on. And it does not respect it all the time. But the most important thing is to look at the broader picture, because now we have a roof and we have a floor. So when price came back, it broke that structure. It returned again, broke it, but it couldn't cross again, respected it from the supply perspective, thereby respecting all the ROS and disrespecting. So when price return here is ROS, resistance becomes support on break of structure. And we had it here again. It could be retest candle, depending on how you see it. But we have 3 ROS level on this area, giving me an ascending trend line. And I vow on it. And look at what price did. When he returned back, he respected it now as support. After playing us full here, he came here, broke this supply roof. But when he came back, he didn't hold as support. Remember, he didn't hold as support when he came back. He broke it. So market is like this. It's like this. That is why when you are in a wrong trade, you cut your loss and replan. So when price returned here, he respected it as a supply roof. So we have supply roof 1, supply roof 2, supply roof 3, giving us an ascending trend line. Now, the trend line now has power for holding price 3 times. Now, when we had a breakout of that structure, what were we expecting? A retest to a broken structure. When a supply roof is broken, it becomes a demand floor. So when price came, what did it do? It respected it. Look at it on a line chart on 4 hours. And when price returned here, it respected this structure, making here an SR, support become resistance on break of structure. So what it means now is that now we have had series of ROS level respected 3 times, and we have 1 demand respected. So we have 1, 2, 3, 4 respect on this ascending trend line. And what happened again? By Friday, we have seen price return into this structure. And when Friday returned into this structure, do you know what happened? It respected. We had a close. After price dipped itself in the descending trend line, we had another structure. On 4 hours, we can see we have here as a supply roof. Here is a supply roof. And the price broke a structure and formed a structure at this level. After it has formed that structure, now it came back to retest the structure 1. This is the retest on that first structure formed, and price came back and retested that structure again. A free giveaway trade on a descending trend line. This is a supply roof. This is a break of a supply roof, a retest, because the market has to first of all create a structure. So you cannot form structure on your own. It has to create it. So when it creates it, you now leverage on the structure it creates. So sometimes you don't have to trade until you see market create a structure. So you see what we are drawing without these 2 price action here, there is no way you can be able to draw this line. Market must create this structure first. It has to create it. If it doesn't create it, then you don't know what to trade. You cannot know the right direction. You may be right, but you are not sure. But the moment you have seen this, that the market has created this structure, now the market created this structure, then come down here to tap into that long-term supply roof, which we already explained. Then you expect it to return back. When it return here, is a potential buy. So you can come here on a very big lot size and take a buy up to 50 pip and get out of the market. Knowing whether this market is falling, it can still come back. Now the market returned back on Friday to peak liquidity on a descending trend line. But one thing happened. It closed above a key respected trend line. That key respected trend line was the previous ROS level 1, ROS level 2, ROS level 3, break of structure. It becomes an SR. So the market has closed above it, indicating that as the market opened, market may likely continue to trend, because he respected that structure. For him to have respected this structure is presence of liquidity, showing that the carry-on trade yield advantage of 1.6 in favor of euro for carry traders might be seeing a borrowed debt from from Japan to invest in euro bond debt. So what does that mean is that on fundamental, we could be seeing that this rejection at this level could translate to a buy that might continue to see price return back into this level. And if we look at it, euro JPY has been falling for some time now. This bearish drop it really shook the market. It's going to take time for market to recover from this bearish drop. This bearish drop you see here is going to take a whole long time for market to recover from this drop. You can see it here. This drop at this level is very massive. You see at this level, every trader that have placed a buy order is in loss. No matter your buy, it will break it. Look at the bearish drop continuously. Market started from July. Entire of July up to August was a bearish drop on day to day, back to back, sell, sell, sell. This is where institutional trading comes in. Some traders who are long-term traders understand this strategy. They just place their sell here and they don't want to trade again. They allow the market decide, knowing where the market will update the floor. Did the market update the floor or not? The market came to the floor. It has been updating this floor after break of structure in June 2023. Demand 1, demand 2, it came here, demand 3. It came here, demand 3 on double confluence. That double confluence is what? A break of structure from this level, a descending trend line breakout, retest 1, retest 2. So I think from a structural perspective, except we have fundamental change. So if there is change in fundamental data, and there are a lot of news that are coming up, which I will also paste. So this will guide us so that we'll combine the upcoming economic data with the market structure, with the previous existing interest rate differential. The interest rate differential already is already in the favor of euro. But the market can still go down. If we have unfavorable economic data coming up, it can change it and we'll have a break of structure. If we have a break of structure, look here, you see there is always room for price to fall. That means that if we are falling, we could return to this place. And if we return here, it's not enough. Price can bring it can bring euro here. JPY can do it to align what with the existing descending trend line. So let me also shade it so that in the future, we'll all see it that the market is well structured, very well structured. So it could bring here, make here what? Your new demand floor. That is also possible. That's very much possible. So I'll be watching out for the economic data that will come up and I will drop it so that we'll combine all these things together to guide our buyers. But for me, I want to stay on Euro JPY on 4 hours. I have my reason. I only want to trade Euro JPY on 4 hours. The reason is because there are a whole lot of false alarm. So for what I have here, I see that 4 hours rejection. I'm going to monitor it. But it's most likely that EJ will be favoring Euro buy. Most likely. Yes, because you see, we have updated the roof, updated the floor. Since we updated the floor, we have not gone to the roof. We have not updated the roof, showing that there is still a lot of liquidity, there is still a lot of money that is building up for take. It's either they decide to come down more to get more money, or they go up, then seek liquidity and sell down.